Across the country, paychecks are rising, job reports look strong, and the news keeps saying the economy is doing great. Yet people keep asking the same question: why does it still feel like we're broke? Families work full-time, sometimes two jobs, and still can't afford what their parents once could. Rent eats half the income, groceries cost more each week, and even small comforts now feel like luxuries. It doesn't look like a crisis. There are no breadlines or stock market crashes on the news, but underneath the surface, millions are quietly sinking, not from unemployment, but from a system that keeps taking more while giving less. This is the silent depression, an invisible downturn where life keeps getting harder, even when the numbers say it shouldn't. And if you've been wondering why you can't seem to get ahead no matter how hard you work, this video will explain exactly what's happening. Every morning begins the same for most people. They check their bank accounts, see their pay deposits, and feel brief relief. Then the bills arrive. Rent, insurance, food and gas swallow the paycheck before they even notice. The math no longer adds up. Government reports speak of prosperity and progress. Charts rise upward. Politicians smile on camera, and news anchors repeat the same message. Yet those living through it know something different. The so-called success feels hollow, disconnected from how ordinary families actually live and spend. Economists point to numbers that sound reassuring. Unemployment near record lows, inflation cooling, wages growing, but these measurements don't reflect everyday strain. People have jobs, but their earnings vanish faster than ever. Stability exists only in graphs, not in households trying to survive. At the grocery store, shoppers stare at receipts that seem to grow longer while bags shrink smaller. Milk, bread, and fruit cost more than last week. Even simple meals feel expensive now. What once filled a fridge barely lasts a few days anymore. Families cut back on extras. Vacations fade into memories. Dinners out become rare treats, and new clothes wait another year. Despite full-time work, people live under constant pressure. It feels less like living and more like balancing on the edge of exhaustion. The illusion of a strong economy begins with averages. When billionaires double their wealth, it lifts the national numbers, but that success belongs to the few. The majority sees little change beyond higher costs, while official reports still celebrate supposed improvement. Corporate profits soar, stockholders cheer, and executives receive record bonuses. Meanwhile, everyday workers face layoffs, stagnant wages, and shrinking benefits. The gap between perception and experience widens each year. Growth exists, but it belongs to someone else entirely. Unemployment statistics hide the truth about work. Many people have jobs, but not enough hours or stability. Part-time roles replace careers, benefits vanish, and contract work becomes the new normal. Employment looks healthy, only when you don't count the missing security. The media repeats the same headline: the economy is strong. Yet surveys reveal most families feel anxious about bills. More than half admit they couldn't cover an emergency expense without credit. Confidence exists in speeches, not in households filled with quiet worry. Politicians frame the economy as success because it fits their message. They show progress charts and rising indexes, using them like trophies. But those numbers blur reality. People working two jobs don't feel celebrated, they feel forgotten inside a story written for headlines. The word growth dominates every discussion, yet it hides imbalance. A handful of industries expand while millions see no improvement. National averages disguise inequality. For most, progress means surviving another month without sinking further into debt or losing basic comfort. Large tech companies report massive quarterly profits. Their employees enjoy perks, but most workers outside that world see no benefit. Service jobs, warehouse shifts, and customer support roles struggle under stagnant pay while the cost of existence keeps rising beyond reach. Financial experts mention resilience as if it's proof of health. But resilience means people endure hardship quietly. It means adapting to less, skipping meals, and pretending things are fine. A strong economy shouldn't depend on silent personal sacrifice from millions. Investors celebrate booming stock markets, but the typical family owns little or no stock. Rising portfolios don't pay grocery bills or rent. The wealth effect bypasses those living paycheck to paycheck, leaving them invisible in the system that claims victory. On paper, everything shines. In reality, it flickers. The gap between national optimism and personal struggle defines this new age. People aren't lazy or reckless. They're caught in an economy that rewards numbers, not effort, and hides inequality behind polished reports. Wages appear to rise, yet they can't catch up. Each small raise disappears beneath higher rents, insurance premiums, and taxes. The math never favors the worker. Every step forward is canceled by three new expenses climbing just beyond reach. Housing becomes the first and deepest wound. The price of owning a home stretches far beyond average income. Even modest apartments consume half of monthly pay. Many adults in their 30s still rent tiny spaces, dreaming of ownership that feels impossible. Younger generations grow up believing they'll never own property. Their parents built equity through steady jobs. Now those same paths no longer exist. Mortgages demand down payments no one can save, while rent swallows every dollar meant for future stability. Landlords adjust prices faster than wages can follow. Listings vanish within hours, forcing tenants into bidding wars for basic shelter. Urban centers grow unreachable. Suburban rents mimic city rates, and rural areas offer low costs but few opportunities. No place feels affordable. Grocery stores quietly practice shrinkflation. Boxes, cans and bags look the same but hold less. Price tags stay identical, giving the illusion of control. Yet shoppers notice emptier shelves, lighter carts, and the steady erosion of what once felt routine. Skimpflation changes quality instead of size. Restaurants cut portions, manufacturers use cheaper ingredients, and service declines while costs remain steady. People pay more for less but are told inflation is improving. The frustration grows because the numbers can't measure disappointment. Even small expenses add pressure. Coffee subscriptions, streaming fees, and app renewals pile up. Each feels minor, but together they drain accounts faster than expected. What once felt like convenience now feels like a slow, constant leak from every direction. Healthcare, once a safety net, becomes a gamble. Insurance covers less each year while premiums climb. Deductibles rise so high that even insured patients avoid treatment. Staying healthy feels like luxury, and many postpone care until it becomes an emergency. Dental and vision coverage separate into their own costly plans. Routine checkups turn into financial decisions. People weigh pain against payment, often choosing to wait. Preventable problems grow severe because the cost of prevention now exceeds the comfort of delay. Education, once a ladder to stability, transforms into a trap. Student loans stretch decades beyond graduation. Degrees that once guaranteed careers now open doors to unpaid internships. The promise of advancement fades into a lifetime of interest payments and quiet regret. Degree inflation adds another layer of pressure. Jobs that once needed high school diplomas now demand expensive degrees. Young workers enter the market burdened with debt, only to find positions paying less than what their parents earned decades earlier. Used car prices explode beyond logic. Vehicles that once cost $5,000 now sell for $10,000. Buyers stretch loans for 7 years just to afford transportation. Even basic repairs feel like financial setbacks in a system where movement itself costs wealth. Auto insurance adds its own weight. Premiums climb yearly, driven by higher repair costs and data algorithms labeling drivers as riskier. Households juggle payments between coverage, rent, and fuel. Every bill feels urgent, yet none can be skipped without consequence. Gas prices fluctuate but never truly drop. Drivers learn to budget their routes, planning errands with precision. Commutes become a financial decision rather than routine. The simple act of driving to work drains both wallets and motivation with relentless regularity. By mid-month, paychecks feel lighter than expected. Rent, groceries, car payments, and insurance leave only scraps for savings. Families stop thinking about future goals. Survival becomes the focus. Hope turns into arithmetic, where numbers decide comfort or stress each week. The middle class, once stable and confident, feels fragile. Emergencies now trigger panic instead of inconvenience. A single car breakdown or medical bill can erase months of progress. The idea of financial security fades into nostalgia for an earlier generation. Surveys reveal most people live paycheck to paycheck despite full-time jobs. Savings accounts shrink, credit balances grow, and optimism fades. The economic ladder that once promised mobility now feels slippery, with each rung covered in rising costs and shrinking opportunity. Each paycheck arrives like a brief breath before submersion. Workers schedule bill payments within hours of deposit, watching balances drop back to near zero. The cycle repeats endlessly, creating quiet exhaustion that statistics never measure or news anchors never mention. Raises and bonuses appear on paper but vanish into new expenses. Rent increases, utilities rise, and groceries demand more each trip. People feel tricked by progress that doesn't exist. The reward for hard work becomes survival rather than improvement. As the illusion deepens, economists claim inflation has cooled, yet the damage lingers in the prices that never return. Even with stability, no one feels relief. The baseline cost of living has permanently shifted higher, locking millions into quiet struggle. Behind the scenes, algorithms control what everything costs. Online stores adjust prices minute by minute, testing buyer patience. When people pay, systems learn how far to push. Inflation now hides in code rather than policy, disguised as data-driven efficiency. Corporations merge into giants, reducing competition. With fewer options, customers accept higher prices as normal. The illusion of choice remains, but behind each brand, the same handful of companies pull every lever, controlling both markets and public perception of fairness. Streaming services multiply and fracture. A show once included in one plan now requires three. Subscriptions increase by small amounts that few notice individually, yet together they consume entire budgets meant for essentials. Entertainment quietly becomes another unavoidable expense. Food delivery apps and ticket platforms add endless service fees. Small percentages stack like invisible taxes on convenience. People grow used to paying extra for the same thing, accepting that everything costs more without understanding who truly benefits from it. Digital micropayments blur awareness. Music, movies, and apps charge pennies at a time, yet banks show shrinking balances. The habit of convenience replaces financial mindfulness. By the time people realize, their budgets leak from hundreds of tiny digital holes. Corporations keep prices high, even after supply issues resolve. They learn consumers will adjust and keep buying. Economists call it sticky inflation. It's less about costs and more about psychology, keeping the new normal fixed at a profitable threshold. Advertisements promise value, but hide rising costs behind smaller packaging, extra fees, and subscriptions. Marketing celebrates loyalty programs that mask price increases. The relationship between buyer and seller turns manipulative, built on data instead of trust or shared understanding. Retailers use behavioral data to shape pricing. They know when paychecks hit, so sales end right before deposits arrive. Discounts appear after weekends, not before. Every detail is engineered to maximize spending, leaving shoppers believing they control choices they don't. Corporate reports frame profits as innovation. Stockholders cheer efficiency, but efficiency means fewer workers and higher prices. Behind every glowing report is a hidden transfer of wealth upward. The economy grows, but ownership of that growth narrows year after year. Consumers adapt to hidden inflation by cutting luxuries, but companies adapt faster, charging for essentials instead. Water, internet, electricity, and housing become the new gold mines. The modern world monetizes survival itself, transforming necessity into a business model of control. Each new convenience carries a hidden cost. Automatic payments, cloud storage, or digital upgrades appear harmless until they compound. Monthly subscriptions create invisible chains that tighten quietly. What begins as comfort becomes dependency, difficult to track and harder to escape. Algorithmic systems reward patience, not fairness. They wait for moments of need, a last-minute flight, urgent delivery, or medical supply to raise prices. Technology doesn't empathize, it optimizes. Human urgency becomes a commodity, priced higher with each click. Across industries, corporate consolidation erases variety. Restaurants, stores, and media outlets share the same parent companies. True competition dies quietly, replaced by different logos serving the same boardroom. Consumers feel trapped between identical choices that all lead to the same checkout. People wonder why their income feels smaller each year, even though they earn more. The answer hides within systems built to take advantage of attention and habit. Inflation stopped being visible, it became strategic, patient, and far more profitable. The result is silent exhaustion. Everyone keeps working, paying, and adjusting, believing they're doing something wrong. But the system itself is built this way, designed to keep prices high, wages modest, and progress just far enough to remain unreachable. Credit cards become lifelines for millions. What once bridged small gaps now covers rent, food, and healthcare. Balances rise faster than payments, interest compounds quietly, and minimum amounts only feed the cycle. Debt turns survival into a lifelong commitment. People swipe without thinking because they have no choice. Emergencies blur with daily spending, and each statement feels heavier than the last. The illusion of control fades as revolving balances grow, pulling entire households deeper into invisible financial quicksand. Student loan repayments return after brief pauses, cutting through fragile budgets. Graduates watch automatic withdrawals remove hundreds each month, undoing years of effort to build savings. The dream of higher education feels less like investment and more like a permanent anchor. Medical debt grows quietly, passed from hospital to collection agencies. Patients sign forms they barely read, unsure of what insurance will reject. Even a minor injury can become years of payments. Health and debt intertwine until both feel impossible to separate. Auto loans extend longer than ever before. Payments stretch 7 or 8 years, locking owners into vehicles that lose value faster than they can pay. Missed deadlines bring repossessions, damaging credit that takes years to repair, if it ever does. Personal loans fill the gaps between income and survival. They promise quick relief but carry high interest. Many borrowers use one loan to pay another. The short-term fix becomes a long-term burden, replacing crisis with constant, predictable financial pressure. Debt stops representing choice. It becomes routine, necessary, and socially acceptable. Friends discuss credit limits the way older generations discussed savings. The idea of living debt-free sounds distant, almost outdated, like something reserved for another time that no longer exists. Interest rates climb with little warning, making every payment heavier. A few percentage points erase entire months of progress. Households that once managed comfortably now struggle to keep up, forced to decide which bills to prioritize and which to delay. A single missed payment triggers penalties, phone calls, and fear. Fees multiply faster than income grows. Even responsible borrowers find themselves behind after one unexpected event. Financial institutions profit most when their customers fail, a truth few realize until it's too late. Families juggle due dates like puzzle pieces, transferring balances between cards, borrowing from one to pay another. The effort consumes energy once spent on rest, hobbies, or relationships. Debt management becomes a second unpaid job for millions trapped in routine. Collectors grow busier than ever, armed with automated systems that never sleep. Messages, calls, and emails flood inboxes daily. People learn to ignore the noise, carrying guilt they never earned. The weight of owing replaces the comfort of belonging. Paying debt becomes endless repetition. Each paycheck disappears into interest while the principal barely changes. The finish line stays fixed in the distance no matter how much is paid. Hope shrinks quietly under the rhythm of unending monthly withdrawals. Some refinance loans just to breathe, trading higher long-term costs for brief relief. It feels like progress at first, then the numbers reveal otherwise. What seemed like rescue only deepens dependency, binding people tighter to lenders who profit from their exhaustion. Access to credit is advertised as opportunity, but it's really control. Every transaction builds a profile, predicting habits and risk levels. Borrowers aren't treated as individuals, but as algorithms. The system rewards obedience, not success, and punishes those who need help most. Debt becomes a permanent companion. It shadows every purchase, every paycheck, every plan. People stop asking when they'll be free, and instead hope only to manage. The new normal is quiet surrender disguised as stability within a culture built on owing. This is why experts call it a silent depression. There are no breadlines, no collapsing banks, no mass unemployment. The suffering hides behind smiles, screens, and steady jobs. People look fine, but their private lives tell another, quieter story. Modern struggle wears a mask of normalcy. Families post happy photos while skipping meals. Cars are leased, homes rented, and clothes bought on credit. Everything looks ordinary from a distance, yet nearly everyone lives within inches of financial disaster. The tools of the modern world hide hardship. Smartphones and delivery apps create illusions of comfort, masking debt beneath convenience. Social media filters poverty, replacing reality with performance. The new depression isn't visible, it's internal, hidden behind glowing screens and quiet exhaustion. People work harder than ever before. Side hustles, night shifts, and remote gigs fill every spare hour. Yet progress remains stagnant. Effort no longer equals reward. Productivity breaks records, but paychecks refuse to follow. The value of labor has been rewritten. Cars, phones, and clothes maintain appearances, giving outsiders no clue. Debt finances normalcy, not luxury. Everyone looks stable until one emergency breaks the illusion. The modern worker survives on borrowed time, keeping up a lifestyle that's less success and more disguise. Mental health quietly erodes under constant pressure. Anxiety grows from unpaid bills and uncertain futures. Sleep shortens, tempers shorten, and patience fades. Therapy becomes a privilege few can afford. Society applauds endurance, but never questions why people are always exhausted. Social media fuels comparison. Perfect lives flood screens, convincing viewers that they're the only ones struggling. The shame deepens as people measure their worth against curated snapshots. Financial hardship becomes something to hide, breeding loneliness in a world full of noise. Admitting struggle feels like failure. Many pretend everything's fine, even when eviction notices arrive or utilities shut off. Pride keeps pain quiet. Neighbors share similar stories but never speak of them, turning entire communities into silent participants of shared hardship. Workers internalize guilt for circumstances beyond control. They assume poor money management caused the problem, not broken systems. Self-blame replaces outrage, making reform harder. The quiet acceptance of unfairness keeps the structure strong, feeding a cycle built on invisible suffering. Burnout becomes the common condition of this decade. People wake, work, and collapse, repeating the same loop. There's no celebration of milestones, only survival between pay periods. The silent depression doesn't shout. It hums beneath daily life, steady and inescapable. Side hustles become a second currency. People drive, deliver, design, and write during hours once reserved for rest. Free time turns into income time. Society praises the grind while quietly erasing leisure, redefining ambition as exhaustion measured in unpaid evenings. Vacations shrink into short weekends or vanish completely. Workers save time off for emergencies instead of rest. The idea of taking a break feels risky, as if stopping for breath might cause everything to collapse under its fragile balance. The silent depression doesn't show through collapsing banks, but through collapsing routines. People eat later, sleep less, and worry more. They pretend stability exists, because admitting otherwise feels unsafe in a world that punishes visible weakness and rewards endurance. Even small joys now carry guilt. A coffee out, a movie ticket, or a short trip sparks anxiety over wasted money. Pleasure feels dangerous when survival depends on restraint. Living comfortably becomes an act people quietly apologize for inside their thoughts. Every generation measures decline differently. Older workers remember when one income supported a family. Younger ones juggle multiple jobs for shared apartments. Each believes the other had it easier, missing that the system changed beneath both, rewarding profit instead of effort. Housing shortages persist, pushing prices higher each month. New construction focuses on luxury units, not affordable homes. Families double up, renting smaller spaces for more money. The dream of a stable home fades as shelter becomes the economy's most profitable product. Renters compete fiercely for limited spaces. Application fees, credit checks, and deposits drain savings before leases even begin. Some move frequently to chase cheaper rents, never building roots. Constant relocation becomes a quiet symptom of economic drift spreading across cities. Automation creeps deeper into every industry. Machines and software replace workers faster than they can retrain. Efficiency increases, but wages don't. The promise of progress turns hollow when technology serves investors more than the laborers it was meant to help. Gig work expands, selling freedom without security. Flexible hours sound appealing until there's no healthcare, retirement, or consistency. Workers absorb business risks once carried by companies. The structure of employment shifts, leaving millions responsible for stability they can no longer afford. High interest rates stay locked in, reshaping expectations. Borrowing becomes a privilege again, shutting out first-time buyers and small businesses. Credit tightens, innovation slows, and everyday people bear the cost of economic policies designed to protect the powerful few. With loans harder to secure, ownership drifts farther away. People rent cars, phones, and even furniture. Subscription life replaces ownership life. Each payment extends dependency, transforming stability into a monthly contract instead of a lasting foundation for the future. Corporate mergers continue quietly. Fewer companies control more of daily existence, from food to medicine to news. The illusion of competition masks monopoly. Consumers unknowingly fund the same boardrooms across industries, feeding a loop where choice narrows and influence concentrates. Wealth gathers like gravity at the top. A handful of individuals and firms hold more assets than entire nations. Their decisions shape prices, wages, and policies, while the average worker becomes data on a chart tracking obedience and spending patterns. Public frustration grows louder online, but changes little offline. Comment sections overflow with anger, while policies stay frozen. The divide between conversation and action widens. People feel unheard, disconnected from systems that still claim to represent their best interests. The cost of living crisis becomes structural, not temporary. Prices stabilize at levels that strain most families. Each new generation starts lower than the last, inheriting debt instead of assets. The economy doesn't collapse, it hardens into inequality disguised as normal progress. Survival requires strategy, not luck. People learn to track expenses with precision, focusing only on needs. Small adjustments, canceling unused subscriptions, meal planning, buying secondhand begin to matter. It's not glamorous, but control returns in tiny, deliberate decisions made each day. Developing side skills becomes a quiet revolution. Learning digital trades, language work, or repair crafts builds independence. Small online earnings add safety nets that jobs no longer provide. Knowledge becomes armor in a system tilted toward uncertainty and hidden costs. Freelance work opens new doors for some. Remote clients replace local employers, diversifying income streams. It's unstable but freeing. The trade-off between control and predictability becomes the new career balance, a negotiation between independence and constant hustle. Understanding interest, credit, and compound debt turns into survival knowledge. People study financial literacy like past generations studied religion. Awareness doesn't solve everything, but it stops the worst traps. Education becomes rebellion in a system that profits from confusion. Small victories matter. Negotiating bills, switching service providers, or paying cash for essentials saves bits of freedom. Progress feels slow but measurable. The modern battle isn't about wealth, it's about reclaiming control from systems built to quietly drain it. Community efforts rise quietly. Local co-ops, credit unions, and neighborhood trade circles grow stronger. People rediscover cooperation as protection. Sharing resources turns into silent resistance against the constant pressure to consume alone. Collective strength becomes the overlooked solution to personal struggle. Consistency replaces perfection. Automated savings of even a few dollars each month rebuild confidence. Small, repeatable habits replace grand plans. In a time of volatility, steadiness becomes the new success, measured not in wealth but in the absence of crisis. Knowledge spreads through podcasts, forums, and online groups. People trade advice on cutting costs and escaping debt. Awareness builds quietly, forming communities bonded by shared frustration. The internet that once sold distraction now becomes a place to rebuild understanding and control. The silent depression reveals itself not as personal failure but as systemic design. Workers didn't cause this imbalance. They adapted to survive it. Real change begins when understanding replaces shame, and when collective frustration turns into informed, united demand. Awareness is the first form of resistance. The silent depression thrives in confusion and isolation. Once people see its pattern, they begin to challenge it, through choices, education, and unity. The numbers may still lie, but the people finally understand.